Hello and welcome. In this video, we'll dive into what MCLR, or Marginal Cost of Funds-Based Lending Rate, means, how it's calculated, and why it matters for borrowers. This is especially relevant in light of recent changes in bank lending rates. MCLR stands for Marginal Cost of Funds-Based Lending Rate. It's the minimum interest rate at which banks are allowed to lend money, introduced on April 1, 2016, by the Reserve Bank of India, replacing the old base rate system. Clear tax. Four key components determine MCLR, marginal cost of funds, mainly the bank's cost of raising funds, including borrowings and deposits, operating costs, the bank's overheads, tenor premium, extra based on loan duration and risk, negative carry on CRR, cash reserve ratio. Since banks earn nothing on CRR amounts, it's accounted as a negative. Clear tax brings transparency and ensures that changes in RBI policy, like repo rate adjustments, reflect more quickly in loan interest rates. Unlike before, when base rate changes lagged, MCLR speeds up interest rate transmission. Clear tax bank bazaar. Here's what's happening now. Several major banks have recently cut their MCLR rates. SBI reduced its MCLR by up to 25 basis points, BPS, bringing the range to 7.95%, 8.90% effective the 15th of July 2025. The Economic Times. In September 2025, Punjab National Bank, PNB, cut MCLR by up to 15 BPS, and Bank of India, BoI, by 515 BPs, effective the 1st of September 2025. The Economic Times. Yesterday, HDFC Bank trimmed its MCLR by up to 5 BPS on select tenures, again easing borrowing costs. The Economic Times. These reductions in MCLR mean that borrowers with floating rate loans tied to MCLR, like some home or personal loans, could see lower EMIs, giving financial relief. These banks initiated rate cuts even though the RBI repo rate has been held steady at 5.5%, following the August 2025 monetary policy decisions. It demonstrates how banks can independently adjust lending rates based on cost factors and competitive strategies. The Economic Times, the Times of India. That wraps up our guide to MCLR, what it is, how it's computed, and why today's reductions matter. Feel free to like, subscribe, and comment if you'd like a breakdown of other lending benchmarks like RLLR or External Benchmark Lending Rate, EBLR. Thanks for watching.